People say just buy index funds, ETFs are better, mutual funds are a ripoff, but most of the time they're actually talking about the same thing and don't even realize it. Today I'm going to talk about the specific differences of index funds, ETFs, and mutual funds so that you never get confused again. As we go through each one of these today, I'm going to talk about how each is structured, and I'm also going to talk about the pros and cons of each one as well too. So hopefully by the end of the video, you'll know exactly which one of these is right for you. I'm also not going to be using any fancy jargon. I didn't go to school for finance. I don't work in finance. I'm just a basic guy, so I'm going to keep this simple and to the point as well so that we can all understand what is going on with ETFs, index funds, and mutual funds. And before we compare any of these, we need to know the one similarity between all of them, and that is that they are all funds. And what that means is that each one of them, you can think of it as almost a basket of stocks. So whether it's actively managed, whether it's passively managed, whether it's tracking an index, each one of these funds essentially has slices of a stock inside it. And so when you buy the fund, you are buying a small portion of each stock inside of that basket. The differences come down to how each one of these is structured, how it trades, and how it is managed. So let's start with index funds, since that is where most of the confusion begins. An index is not a product, it is a structure. You have the S&P 500 index, that's the 500 biggest companies in the US. You have the total US index that encompasses all companies inside of the US. The key thing about an index is that it is locked to those stocks. There's no stock picking, there's no market timing, just matching the market. And here's the key that most people completely miss. An index fund can be an ETF or a mutual fund. An index is the strategy, an ETF or a mutual fund is the actual product type. So keep that in mind, and the rest of this is all going to click. Now let's talk about ETFs or exchange traded funds. ETFs trade like normal stocks. You can see the price during the day. You can use limit orders. You can buy and sell as long as the market is open. And most brokerages also offer fractional shares. From a cost standpoint, ETF expense ratios are usually very low, especially when compared to actively managed mutual funds. For the tax side of things, ETFs are actually more efficient than mutual funds as well, because you do not realize those taxes until you decide to sell. And then looking at the transparency of them, this is actually better than most mutual funds as well too, as some of ETFs holdings are updated daily, and then most of them are updated either monthly or quarterly. All of these reasons are why ETFs are so popular today, because they combine flexibility with transparency, and especially for new investors or those who are kind of DIY investing on your own, those are all things that you love to see in an investment. Getting into mutual funds, these look similar on the surface, but actually operate in a very different way than ETFs do. Key differences with mutual funds is that they only trade once per day at market close, and you cannot use a limit order, or it does not trade like a normal stock. You basically say, hey, I want to buy this much of this mutual fund, and then it executes at whatever that price is at the end of the day. Some mutual funds also have a minimum required initial investment that you need to make. So if you look at some of Vanguard's mutual funds, you actually have to have an initial investment of over $3,000 to start investing in that fund. On the tax side of things, mutual funds are actually a little less efficient as well too, because when people enter and exit the fund, the manager might have to sell some assets when that happens, and then that tax burden gets distributed down to all of the holders of that mutual fund. So you do not get to decide when you realize that tax burden, and it's really up to the manager. The cool thing about mutual funds is they are often easier to automate and set up automated monthly contributions. That said, this has kind of been changing over the last few years, as many brokerages have already implemented automatic investing for ETFs and normal stocks. This used to be a big advantage of mutual funds, but now that brokerages are kind of getting with the times and you can do a similar automated buy of ETFs, this is not as big of a factor as it used to be. Now that we've covered the basics of each, a side-by-side reality check of these is that ETFs and mutual funds can have the exact same strategy and hold the exact same stocks. The difference is really how they operate and how they trade. For example, Vanguard's total market mutual fund and total market ETF hold the exact same stocks and dang near have the exact same performance. So which of these are most people referring to when they say just go buy an index fund? Historically, they are referring to index mutual funds, though now with ETFs and how they have exploded onto the market, you can buy ETFs that track the exact same index. The key to remember is all index funds are either ETFs or mutual funds, but not all ETFs and mutual funds are index funds. Clear as mud, I know, but you might have to replay that statement right there, but that is basically the basis for this entire argument of index funds versus ETFs versus mutual funds. My take is that ETF indexes are the best way to invest. I like the flexibility of ETFs. There are lower minimums for investors. They buy and trade like a normal stock. And overall, you can basically get an ETF that does the exact same thing as almost any other mutual fund out there. And most of the time, the expense ratio is also going to be less. I did a full video on expense ratios. If you want to check it out, I'll link it up here. But that is my take. I personally prefer ETFs over the mutual funds. Mutual funds are not bad by any means. They are just a little bit older. They're often less flexible and they're often less tax efficient than compared to ETFs. And so at the end of the day, I prefer ETFs, but the wrapper is not what matters. The important is that you are actually investing. So whether that's ETFs or mutual funds, I still applaud you. Hopefully this video helped to clear up some of the differences between these three terms, and maybe now you can go flex on your friends when somebody says something incorrectly. But thank you for watching. I hope you learned something. Drop a comment down below on if you prefer ETFs or mutual funds, and I will see you in the next one. Thanks for watching.